So today we're going to do a 5 stocks I'm watching video. These are the 5 stocks that I am closest to buying, which I currently don't own. And these stocks can change all the time because sometimes a stock might instantly drop 20-30%, and that goes into what is very close to what would be my buying area, my buying category. But sometimes it changes because, like I said, sometimes the stocks can drop, sometimes they can bring out earnings, and I'm like, okay, this company is on absolute fire, maybe I need to reconsider this. Maybe they're going to do potentially even better numbers than what I thought they were going to do. There's a lot of different factors that come into play, and somebody mentioned it in a comment on a video previously saying, can I talk about the 5 stocks that I'm closest to buying that I don't own? And I thought, you know what, that's a really good idea because it changes very often, whereas, you know, the stocks that I talk about most often, the stocks that I own, I generally will own them stocks for, 3, 4, 5 years, so I'm always talking about them. And sometimes it's good to kind of put the light on some companies that I don't own and are considering. So yeah, good suggestion from who it was in the comment section, and yeah, we'll go through these 5 stocks that I'm closest to owning, and I'll also try and mention maybe the reasons why I potentially haven't bought these companies yet as well, and what's stopping me from buying them. So number 1 on this list, and is the stock that I want to own, or I am the closest to buying, and I have been very close to buying this over the last few weeks. And potentially when it did drop down to $6.40 briefly, I should have maybe pulled the trigger on it, but it's MercadoLibra. So these guys are an e-commerce play in Latin America, as well as being an e-commerce play and basically the Amazon in Latin America. They are the number 1 player in that area, but as well as that, they are also like the PayPal. So they have also set up a finance business. So they kind of have the e-commerce side of it. They've kind of taken the market from Amazon, and they're doing absolutely phenomenal in the likes of Argentina, Brazil, Chile. And as well as that, because there hasn't been great adaptation to fintech over there, they also set up a bit of a fintech business, and that's growing rapidly as well. So with this one, you're kind of getting the Amazon of Latin America and also the PayPal of Latin America. So 2 great income streams, and also very diverse across different countries as well. It's not kind of like a Coupang, which relies mainly on, say, South Korea. This has a lot of Latin America covered very well as well, and that is very much in still a very hyper growth stage at the moment, and that's very much proven where the likes of Amazon are having very tough comps at the moment and are growing like, single digit range, whereas MercadoLibra is still putting in, I think the last quarter they put something like 60% revenue growth in or something crazy like that. And the great thing with MercadoLibra as well now is they've actually turned that like inflection point where they've gone from just losing money to actually making really good amounts of profit as well, which is interesting. So yeah, I'm a massive fan of this. Like from a business point of view, it's a great business. The only reason why I haven't really bought it is the valuation side of it. Even though right now at $767, it is one of the cheapest valuations it's ever been on like a metric basis in the last like 5 years. It's still relatively quite high considering we've seen in this period of time, in this stock crash and this bear market, we've seen plenty of companies lose massive amounts of value, and MercadoLibra is doing okay. I mean, if you do look at the 52 Ks, it is down 60%, but even down 60%, this company is still, decent-ish valuations at the moment, and that's the only little thing that I've kind of been put off buying it. So yeah, I'm still very 50-50 on this one. I've also considered potentially buying a position, and then if it doesn't go down, fair enough, I've got some shares, not the position size that I want, and potentially then I could sell that out for maybe a smaller 30-40% profit, which I've done previously before with positions that I haven't been able to build out. But then if I do buy, then it does kind of hit down to the ideal range where I want it to be, which is like the $600-$500 range. Then I can actually build up that position more and more. So yeah, this is definitely number 1 on the list at the moment. So yeah, that's MercadoLibra. I've actually made a full video on it a couple of weeks back. Number 2, Tesla. So I would not say this is actually my second favorite on the list. I would probably say this is probably my 4th that I'm kind of considering. What happened recently is Tesla actually had a bit of a slump in the share price. You can see here it was actually starting to touch the $628 range, and Tesla started to get to more to where I was really considering buying a position. At the moment, 747 isn't too bad. Ideally, I thought, the 600 isn't too bad. Ideally, which I thought we could see with Tesla in a bear market, and obviously with the issues that are going on at the moment in the short term with the Elon Musk and Twitter situation, the Shanghai situation, and there's a few more than that. I thought potentially that with all these kind of pressures, headwinds on at the moment and macro events going on, we could see Tesla push into that $400, $300 range, and I was like, okay, then that would be where I would buy Tesla. And I'm kind of waiting for that. So that's where I'm kind of waiting for Tesla at the moment. I would like it to come a little bit cheaper. With Tesla, I think there's still phenomenal upside. I think, we're very early stages in the EV cycle, and then there's also other parts of the business that will do very well going in the future. I'm not one of these ultra Tesla bulls that think Tesla's going to be 10x in the next 5 years. I think the days of Tesla going up 10x are unfortunately over now. It's just got a lot of already a lot priced in at the moment, but I don't believe it's got its max potential priced in, which would still see it probably go up to I would say 2x from here in the next 5 years, which would still be a pretty decent return. So I'm kind of watching this one at the moment. And like I said, I don't think it's terrible right now, but ideally I wanted it a little bit cheaper. And I think when you talk about the potential, the main leader of the EV space, which is only just starting, and then there's also the other little things that you will get with Tesla as well. I think it's a fantastic one to be considering. Next up is Starbucks. So I'd say Starbucks is probably the third on this list. I think that Starbucks speaks for itself. It's one of the major brands out there. Great moat. People are still going to go for the coffee, and it's still got a lot of room for expansion going forward. The valuation is not too bad to compare to what it normally is at 21 times earnings. I would like to get this a little bit cheaper, considering that it's also a 2.5% dividend yield as well. So Starbucks recently had, once again, they started touching, you can see here, the $68 range, and I kind of thought, well, if I get Starbucks in that $60 range, that's where I would consider buying it. It did get there. Unfortunately, it was on a week where everything was kind of dropping down. So it's very much like in MercadoLibra. It did touch $640, but it was only down there for like a couple of hours, and it's same for Starbucks. I need it to kind of stay down there for a little bit. So if it gets into that $60 range, I'd be interested. As well as putting it down into that $60 range, you'd be talking about a P ratio down in the teens. As well as that, you'd talk about a dividend yield that would be pushing more towards like a 3% then as well, which would be a lot better. So I think Starbucks speaks for itself. It still has a lot of potential in the next few years. The next one is probably the second one that I'm closest to buying, which is Revolution Beauty. They recently brought earnings out, which are absolutely fantastic, and it proves that even with what's going on in the world right now, people still will go out and buy makeup. It was the same with Elf Beauty and Ultra Beauty, I think it was. They brought out earnings that were incredibly strong. Revolution Beauty came onto the stock market around about July time 2021. Like we know, that is the worst time because that's where the peak of the market was, and from about July time, especially for any small growth stocks, the market has been downtrending for a year for any growth or small market cap stocks, and that's the same for Revolution Beauty. So it IPO'd, you see here, around about £1.70, and now it actually sits below £1. And it's crazy because like the last few weeks it's seen a drop of like 16%, and that's off a recent earnings report that was fantastic. If you look at the recent earnings report that they came out with, the growth into America has been going very well. You can see here strong financial year 2022 sales up 42%, and adjusted EBITDA as well was up 73% with record sales in Q4. And like I said, this was a very strong earnings report from Revolution Beauty, and more than anything, all it did was send the share price actually lower, which is crazy. So now it's gone from £1.70 after its IPO down to now below £1. I'm really considering this. The only reason why I've not really been buying Revolution Beauty at the moment is because it was just a recent IPO. So I was waiting for them to come public, let any insiders want to offload the shares, see where it settles down at, and get a few more quarters of financial data out and see can they achieve what I was hoping for, which is 20+% revenue growth. Can they start pushing towards profitability? How is the US expansion plan going? And when you look at all them things that have come out from the company, it's on fire. So it's definitely obviously the UK stock that I'm closest to adding in. But at the moment, it's definitely second behind MercadoLibra at the moment. I think this is very, very tempting at the moment. So it's definitely one that I'm watching. And like I say, it's between that one and MercadoLibra that I'm very much considering. And I've even considered potentially selling out of a UK position to get the funds that I already hold, so then I can use them funds from that sold position to buy into Revolution Beauty. Because there's a few stocks that I currently own that I think I would actually prefer to own than or ones that I do have already. So that obviously speaks a lot as well. And the last one, which is probably fifth on this list, one of them towards the back end, because I still think the valuation is slightly high, but I think the company is fantastic, which is Fiverr. So this is a freelance site. So basically, you know, if you want one-off jobs, gigs, someone to work for you on a regular basis, but maybe, you know, not be employed by you, maybe once a day doing something. And I think that this is only going to be growing because of the last 2 years, and more and more people becoming aware of it. And the platform itself is really good. I've used someone's services through Fiverr before, and it's a fantastic platform. So yeah, I think for me, I think the industry is going to be stronger than ever. I think that the actual platform is fantastic. The only problem I have with the business is the actual valuation side of it. I think it's still maybe slightly high at $41, but it's a lot cheaper than where it was back in February time when it's $323. You know, imagine if you bought the 52 guys there. That's a bit of a fall, that one. I mean, that's nearly 86%. But the growing revenue, still very good. The gross margins are fantastic. Without looking right now, I think the gross margins are like somewhere in that 80% range. They're starting to ramp up that profitability a little bit. So yeah, it's one that I am watching very closely. Like I said, I always said that potentially if Fiverr got to the $30 range, I'd buy it, and it has been in there, and it has been in there for a while. The only problem is that now Fiverr is in that $30 range, is that I'm seeing a lot of opportunities out there. You know, with this crash that's going on, you're getting presented with the opportunities of like Hims in $3 range, you're getting DraftKings in like $9 range, and opportunities like that. And that's the only thing, is I can't really justify putting that capital instead of in DraftKings and Hims into Fiverr at the moment, because I look at Fiverr and think it's still not too bad of a valuation, where you're looking at something like a Hims, for example, that's one-time sales, that's growing even faster than Fiverr and has just as good gross margins. Something like a DraftKings, for example, which is once again growing faster than a Fiverr, a lot cheaper valuation, and has the bigger TAM in the next 5-10 years. And that's the difficulty with Fiverr. So as much as I'd love to be buying this one at the moment, I just can't get across the line. So I'm watching it, because you never know, you know, if every other stock goes up and it stays down here in the $40 range in 3 months' time, then that could potentially be the point where I go, okay, it's time to add that one in. So yeah, this is one that I'm still a bit undecided on at the moment, and a lot of that is due to the valuation. So yeah, just a couple minute fire on a few stocks that I'm currently watching, the 5 stocks that are a bit more to my higher range that I'm watching on my watch list. But yeah, hope you enjoyed it. It was something a little bit different. Let me know in the comment section any stocks that you're currently watching that you don't own that you're very much interested in. I'm always interested in hearing some of your guys' opinions on some stocks. Sometimes there's some that I don't really follow, or sometimes it's a stock that I've not looked for a while, and then I go look at it and I'm like, oh, I didn't realize that was down at that share price, and I can get quite interested in it that way. So yeah, hope you enjoyed it. As always, if you can hit that like button to help with the YouTube algorithm, that'd be absolutely amazing, and I'll see you on the next video.